Good afternoon, everybody. Gabe Velazquez here with you, Transparent Trading Solutions. Hope everybody's doing really good. Type in the chat if you can hear me okay. Let's go ahead and get started. All right. So let's review. Hey, Dennis, how you doing? So I was with you on Friday, and I don't know if you guys remember. I don't know how many of you guys were with me. Yeah. So my parting shot really on Friday was I said if you think about what's going on with the indexes, and I guess the comment was, with all the negative stuff getting thrown at the stock market, um, i.e., the inflation numbers were really bad, Fed's tightening, and so on and so forth. They still, the market does not refuse to go down, right? So the market was basically telling you that it was probably due for a bit of a bounce, and we got that. Now, I don't know how many folks are in here. I can't even tell, but one of the things that we're going to do together for the next half hour is we're going to go through the charts, and I think it's going to be a lot more productive if when you're going through the charts. Hey, how you doing, Mary? Uh, I'm going to give you some levels, and then you can look at your charts. We can look at the charts together. We really haven't had. All we really did, we've obviously had a really strong rally coming in here at the end of the day. And the numbers I gave you on Friday were 3,700 on the S&P. Let's start with the S&P. So the numbers I gave you on Friday, 3,700, 3,950. That was basically the range that we've been in thus far. And today's rally, coincidentally, we're getting close. 39, 38.50 is where we're at. So all we really have done, if you really kind of uh, look at the market objectively, is we have essentially rallied right back to the top of the range, and so we still technically have not broken out. Is there a chance that we could fall right back down again? Yesterday we came up to the lower end of this, the top end of this range as well. Apple came out with some negative news and they took the market down. But again, you can see the resiliency in the market. And so we are now at a very critical point in the S&P. Whether we break out, we have, Netflix coming out probably in the next few minutes. We got Tesla tomorrow. We also have the ECB on Thursday. I'll talk about the dollar in a second here, but all in all, just essentially at the top end of the range. Also, the NASDAQ did pierce that top of the level just by a bit here. The level on that NASDAQ I gave you guys last week was 11.4, 12.250. So we'll have to see. We actually did breach that. 12,286 is where so the NASDAQ still showing some relative strength here with the semis. I also did mention under the hood last Friday about the semis. Semis are starting to act better. There are some technical levels I'm looking at on AMD, which is one of the stocks that I've been looking at as a bellwether. Also Taiwan Semi. So if we can get those going, I think that would also help push the NASDAQ higher. But again, first things first, let's get past this. We've had these false rallies, obviously all year. The difference now, aside from the chart patterns, is that in the past, when we had these hot inflation numbers, I wrote about this over the weekend. When we've had these hot inflation numbers in the last several months, the market has tanked, right? So we had some really hot numbers. Yeah, Dennis, 4,100. Yeah, roughly. If you take a look at 3950, yeah, it's roughly 4,039.50. I think that's kind of what kind of we're in the ballpark, right? You can see there's kind of that prior high at 3950. That's kind of where I'm looking at. And then if you clear that, there really is not a whole lot. You got kind of clear sailing after that. So we'll have to see. But this is all going to be predicated, obviously, on we still have a bunch of earnings. Next week is going to be big on earnings. We got Apple, we got Microsoft, we got all the biggies, right? All the big cap, the ones that are actually going to move the market. Tesla will probably move the market, maybe even Netflix today, but those are the big ones next week. So it's still, kind of jury's kind of still out actually. So we'll have to see. Okay, so just to recap, one of the things also I didn't talk about last Friday was the Russell. Look at the Russell, and that's also been range trading, but it's outperforming today, which is really interesting. And look at the 1800 level on the Russell. We are setting up for a really nice breakout on that as well. And that would again be uh, kind of debunk this whole notion that we're in a recession and all that. So a lot of these stocks are kind of telling you that perhaps all of that has been priced in. Remember that the markets are forward looking. So what that means is that markets sold off uh, from the beginning of the year and pretty much have been selling off since the Fed pivot. But now, uh, if you really pay attention, negative news is actually being somewhat ignored for the moment. So maybe to start looking at some pullbacks. Um, if we can get past again the 3950 for me, the 12. We've already crossed the Nasdaq, but we got to get some follow through. And then also again on the Russell, if the Russell can start really outperforming, that would be another positive sign. So, okay. All right. So those are the numbers there on the averages, on the stock averages. Bonds haven't really done anything since we were together on Friday. I'm still looking at the 10-year note around 119. It's been hovering between 119 and roughly 116, something right in there. And we need to get that pushed higher so that yields can continue to fall. That would be one fly on the ointment if we have the 10-year falling off pretty good, and the rates going back up above let's say 3.25, 350. That would actually not be good for stocks uh, generally. So that again, that's another thing to be watchful for. And we have a Fed meeting next week, which is going to be a big deal, clearly. So nothing really to advance on the bond front. Okay, because there really hadn't really changed much since we were together on Friday. Let's move on to the dollar. And I did make mention. Obviously, it's been a big deal. Everybody's been talking about it. Everybody's been super bullish on the dollar. But I did make mention on Friday that we were uh, right at the top end of a monthly distribution area around 109. 10 actually, if you look at the chart, you can see it on a monthly. It's a 105 to 109, and we actually poked right above. We just made a little bit of a move above 109, and we've fallen pretty sharply from that. Uh, we had from the ECB last night. We had the European Central Bank. Yeah, Dennis, we on the futures, we actually that was the actual low right at par. Yep. Uh, the Euro USD. Yeah, exactly. That's the inverse of the futures. So yeah, we actually we bottomed right at par on the futures contract, one to one yen. I'm sorry, dollar to the euro. So it's going to be interesting if that. And we've had a really nice rally as the dollar has fallen all the way down to 106.70. We do have an accumulation area. If you look at the DXY, we do have an accumulation at 106. I did make mention that we did bounce up off the 107, but I would be looking at 106. If by the way, if we do break 106 decisively, that would, I think, confirm that the dollar has in fact peaked out, right? So keep an eye on that for because obviously that, as I mentioned on Friday, that's going to have some big ramifications regarding the currencies and the dollar. I'm sorry, and the metals. Gold has been hit really hard because of the strength in the dollar. So has copper and all of the inflation kind of metals because of the strong dollar. So maybe that could be easing a little bit as the dollar, kind of comes off a little bit. So 106 is the next level on the dollar to be watchful for, and I'll review this on Friday as well for everybody. Okay. All right. So that's let's see, Gabe. For some reason, my levels are holding much better in stocks than futures. Marius, I would say, I'd have to actually look at your levels because levels are levels, and maybe again you can start incorporating some of what we talked about earlier with the bigger time frames and such. Are you trade? One of the things that that you want to do when you're looking at stocks is really focus on the gaps, right? And part of that might be also are you long a bunch of stocks, Marius? Did you take a bunch of stocks long? Is that so? Part of the reason could be because again, remember that. Oh well, there you go. You wouldn't be telling me that if we were sitting here with the S&P down at the lows, right? If the S&P had continued going, let's say from yesterday's sell-off, if it had continued lower, you probably would not be faring as well. Does that make sense? So you've got a little bit of a kind of a tailwind with your stocks because the averages are moving higher. Yep. Oh, good for you. Yeah, I did mention that. Gosh, what, 2-3 weeks ago? Remember we were talking about that? So good for you. Yep. Yeah. So that seems to be doing pretty good for you. Yeah. There's a watch the on AMD. In fact, you probably want to be careful because it is tracking the. Look at that 80. Let's call it 90 on AMD. Do you see that? Yeah. And by the way, if this is going to be a leadership stock, so in order for the Nasdaq futures or the Nasdaq 100, the QQQs or the TQQQs, in order for that really to gain traction, you're probably going to need to have AMD break 90. You can see there's a massive amount of resistance right there around the 88 to 90 level on AMD. Do you see that? Yep. Yeah, there's a big old gap up around the 95 area. So, yep. So, yeah, right in that ballpark. By the way, if we can get that thing to really move above that, then you probably have a really nice continuation rally in the Nasdaq. But if that fails, and they already reported, I think their earnings are coming up pretty soon here in the early part of August. Uh, TSM, Taiwan already reported that was pretty good. That's actually done really well. Micron also did really well. Yep. Yep. Hey, Brom, how you doing? Okay, so let's recap. We just covered the dollar. We covered our major indexes. Let's talk about the oil. Oil is, if you look at the chart of oil today, now, one thing I would mention about oil is it is rollover. So you should be trading on the August contract in oil futures, right? You can also look at USO or some of the ETFs. Unfortunately, I had a long in XLE. I think I mentioned this the other day, which we missed by 3 cents, which is kind of a bummer, but it is what it is. It's obviously moved up pretty nicely since then. Yeah, it's already at 72. We had at 60, 65, 45 was actually our long, and we hit 48, and then the thing took off as oil did as well. So, sometimes that happens, and it is what it is. Let's see. Yeah, uh, September oil is the front month. That is correct. So the U contract. Now, one of the things also, since we have a little bit of time here, there is a big discount. There's a if you go out to if you pull up go to the CME and pull up all the various months in oil going out to next year, you'll see that there is a lot of backwardation going on, right? So in other words, the price as you go out further out in the year, you'll see the price is actually much lower to the point of almost $3-4. There's a big discrepancy in the price of the back months, and so what that does is it adds some distortion to the charts, right? So be careful with that. One way that we're kind of at TTS we're kind of resolving that issue is by just looking at contract specific. So if you look at contract specific, that takes away that rollover gap and then makes it a lot cleaner chart. At the end of the day, looks like we are holding up right at 100. So, we mentioned the other day, I was with you guys, we had this massive range still in place, really, from 90 up to about 125 in oil. We could be in the process, or we could be in the midst of actually starting a new range. If we can't get past 100, wouldn't surprise me if oil now starts trading between 90 and 100. If you can see that kind of plainly on the chart. So it's going to be interesting. And 100 really sets up for a possible break to the upside as well. If you look at the chart of oil today, you saw that it kind of just died. It just got into a very, very kind of narrow range and really didn't do anything for the rest of the day. So that's probably going to set up for a pretty nice move once it breaks 100. So we will be focused on that here at TTS in the probably next day or so. Okay. All right. So also in the energy space, since we're on the energy, we did talk about nat gas also above that 6.5 mark. We broke above 7, and now we're kind of sideways again, waiting for the report on Thursday. So, and again, still with the situation, as everybody knows, there's a heat wave going on in Europe. Russia kind of weaponizing their oil and gas supplies. And so the fundamentals for nat gas still look really, really good. But again, it doesn't mean anything until you realize that on a chart pattern. We do have some pullback areas down below 6 that I would be interested. That again, we're interested in taking at TTS. So right around that 6.5, you can probably see it on your chart. So those are areas I'm looking at, and um, possibly on Thursday when we get that report, that could be, depending on obviously the reaction to that report, could be the trigger, the catalyst to get that thing moving again. So it looks like we're kind of in a pause situation here until Thursday at 10:30 Eastern when that report comes out on nat gas. Okay. All right. So we got nat gas. We covered the dollar. One thing I am also I would probably uh, have you guys look at, which is again has to do with the inflation situation and so forth, is grains. So I didn't really have a chance to cover grains Friday, but just a quick summary: we've had a huge drop in the grain markets, which really belies what you would think because you've got this situation in again in Russia, Ukraine. They're the biggest breadbasket in Europe. The situation here in the U.S., obviously with the weather, could be a little bit of a challenge. But all the grain complex has been just hammered, right? They're down quite a bit. And one of the things I talk about with people is even though it's almost counterintuitive. You think, well, why did wheat have such a huge drop when like Ukraine and whatever, fundamentally you would think, wheat would be really high. But that's not the case. So you got to really, the charts are the master, right? The charts should really drive all your decision making, regardless of what you think. So some levels to look at on corn, 460 a bushel. If we can come down there, I would be interested in maybe positioning long. Wheat 740 and soybeans around 1250 a bushel. We still looks to me like we still have some downside on the grain markets. So I would still sell rallies, but on a longer term scale, if you look at those levels on your chart, you can actually see those. So again, 460 on corn, wheat 742, and soybeans around 1250. All right. So lastly, on the stock market, and this kind of goes along the same lines as what I just discussed with on Boyle. Yeah, I would. Yeah, I would wait for Thursday, Marius, because that report could change everything, right? That the inventory number. Yeah, in fact, if you've been watching nat gas during that inventory number, it's had some pretty nice volatility coming out of that. So, um, and for now, I would just kind of stay patient and see how that plays out. So we've already had a pretty nice run up, and that Boyle, which I introduced you, yep, to the other day. You like the volatility on that thing? I mean, right? If for some of you guys that are going to be listening to later or whatever, I have a fairly small audience today, but uh, yeah, if you guys want to trade, the long side of nat gas without trading futures and sizing it down to, I don't know, 50 shares or whatever, that went from 48 up to what, 60, 66, 67, right, Marius? Yeah, that thing's crazy, right? Yeah, that's the leveraged long nat gas ETF. Yeah, from 48 to 72. Yep, it's pretty crazy. But the great thing about, again, having all these various kind of arrows in your quiver about not just futures contracts is you could, as you guys know, I like to really convey that to you, that there are more ways, many ways you can trade these markets other than just futures, which I know a lot of my followers are kind of futures centric, if you will, but that doesn't always work out that great, right? So you have options on the stocks, you have the ETFs. You could trade UNG if you don't like that volatility. With Boyle, you can just trade, UNG. That's a lot more docile, if you will. That's only gone from 19 to like 24 versus 48 to 72 and so on and so forth. So yeah. So bottom line, Marius, is wait for that report. That's not for another 2 days, and I think you'd be. But I would not get into that right now. Or if you want to wait for, I'm still fairly bullish on nat gas, so I would probably wait for a pullback down into the $6 mark, $6.50 mark. Okay. All right. So lastly, any questions? By the way, I've got about 5 minutes. I'm going to kind of wrap things up here. You guys have any questions? Yeah, typically I get a huge amount of views after this is done live. Fridays we got almost 200-300 views on that. So just kind of addressing some of the folks that will be watching later. You guys have any questions so far? Okay, so to sum things up, and then I'm going to get out of here. Again, huge rally today, but again, keep it in context in the stocks. All we really have done, and we've had these before, is come up right to the top end of the range. So, is it the start of something? We don't know until after the fact. We just have to let the market kind of show us. We are coming into, like, the NASDAQ really doesn't have a whole lot of quality to the upside, so that could carry. But also, again, we have all these earnings coming out. We got Netflix. We got so that could derail things, as you know, just like Apple did. So it's still a little tricky, but still positive for now. Dollar's also a big deal with ECB coming out on Thursday. It's already baked in the cake that the European Central Bank is going to raise by 50 basis points, and that's part of why you see the rally in the Euro futures contract. And by the way, that dollar is a big deal as well, as you know. So we can't have the dollar come back up and make new highs at this point, because that would be also kind of detrimental for some of these big cap tech stocks, because they do a lot of business overseas, and a strong dollar hurts their profits. So keep an eye on that. Oil at 100, and grains, and that pretty much sums it up, everybody. So again, overall, still a trading range market. Lots of trading ranges all over the place. So keep that in mind when you're trading. Trading range, Marius. Yeah, look at your charts. 119 to 116 on 10-year. Do you trade the 30-year? We're still long TLT. We got 114 to 116. We still cannot break out of these ranges, but that probably will change with next week's Fed meeting, most certainly. Okay. All right, everybody. I'm going to get out of here. Thank you for spending some time with me. Hopefully that is helpful. I will be with you again Friday at the close. We'll recap the week. Have a great rest of your couple of days. Trade safe out there. Again, remember, we're still in a range. Don't get too greedy if you're long, and if you're short, we're probably going to come up to some levels that you want to short. So in the meantime, stay patient. Okay. All right. Take care, everybody. Have a great rest of your week, and I'll see you on Friday. All right. Take care.